Hello and welcome to our weekly overview of the global markets, section 1. So, without further ado, let's begin with Japan. The bottom line here remains that prices are completing a sideways correction in wave 2, and the next big move should be higher, a rally in wave 3 of 3. Near term, prices saw a small bounce. However, it is still too early to conclude that wave 2 is complete. It would take a return back above 29 for 13 to suggest wave 2 is complete. Until then, however, the prospect for more downside activity towards our target zone at 25,628 slash 219 remains intact. Next up is the Eurozone and the Stocks 50 index. Prices continue to trade sideways. Our working assumption remains that prices are completing a bullish triangle for intermediate wave 4. This triangle should give way to a rally to new highs into the new year in wave 5 in blue. Key support for this triangle scenario is 39.69. A break below this level would basically imply that prices are completing a flat correction for intermediate wave 4. Channel support comes in at 38.55 below there. And now let's jump to China. Prices here continue to maintain support along the BD trendline and the 62% retracement of wave 1 at 14,982. However, there is still nothing to suggest that intermediate wave 2 is complete. We need to see some upside acceleration above 18,551 to gain initial evidence that prices are turning higher in wave 3. Until then, any further decline near term should be limited by the 78.6% retracement of wave 1 at 13,451. And now let's take a look at the UK. Prices here remain locked in a tight range that should ultimately be resolved to the upside as we favor a developing third wave advance. The 1.618 multiple of wave 1 at 80.71 is a strong short-term target. Support should be found near the prior low at 72.89 on any downticks near term. Next up are the Netherlands. The short term focus here remains lower in wave 4 with 716 on the radar, the 38.2% retracement of wave 3. Near this level, we look for wave 4 to bottom out and then give way to a rally in wave 5 of 3 as the new year progresses. Ideally, wave 4 would bottom out in late February or in early March. Typically, fourth waves tend to travel tend to take at least the same span of time to unfold like wave 2. Next up on our list is France. The near-term focus here also remains lower in a fourth wave. We look for support in a turn higher near the prior fourth wave low at 64.09. Similarly, we look for wave 4 to take at least the same span of time to unfold as wave 2. So wave 4 would be expected to terminate in early April before the next leg up gets underway. And now let's focus on Germany and the DAX. Prices here are still completing a sideways correction in wave 2, but it should be in its very, very late stages overall. We look for a low and a bullish reversal in wave 3 between 14,823 and 14,456, the prior fourth wave low and the 38.2% retracement of wave 1. Our target for 2022 is 19,957, the 1.618 multiple of wave 1, although greater bullish potential exists. And last but not least is Italy. Prices here remain locked in a sideways range between 28,029 and 25,390. This range should ultimately be resolved to the upside as we favor an ongoing rally in wave 3 of 3, with the Fibonacci cluster into the 35,372 to 35,756 area, a strong upside target for the new year. This concludes our wrap up for the first section of the global markets. Stay tuned for the second part.